Yeah, good afternoon, good morning, good evening, depending on the part of the nations of the earth that you are at the moment. You're welcome to the Global Trader once more, and Eid Mubarak to every Muslims, all our brothers, and I wish you a happy and successful celebration. Today, we'll be talking about the beginners class too. Yeah, we've talked about, if you go through our previous classes, we've talked about beginners. We talked about the 1A, 1, 2A, 2B, 3B, sorry. And today we'll be talking about class 2A, which we have has been divided into several series. So, in case you've not subscribed, please subscribe to this channel and click the notification button so that you keep getting new updates as regards forex trading. For now, we're talking about the beginners class, but sometimes we'll be coming up with signals, live trading, and also things that will enhance your trading. Our purpose here or our objectives here is to see you successful. So, in order for us to see you successful, you must pay keen attention to everything we are teaching you on this platform. And also, please disregard anybody demanding for money from you using this platform as an avenue. Please disregard that. We will not ask you for money. If we ask you for money, you will hear it directly from my mouth. So please disregard that. And today in beginners class, we'll look at what we stand to achieve in this beginners class too. What is a PEEP, quote and base currency, what are lot sizes and leverage, pending orders, stop loss and take profit, different types of analysis, understanding your trading window. All right, my name is Olusegun Obaleye once more, and you're welcome once more. So let's dive into today's lecture. What is a PEEP? Very simple. Price index points. Price index points. That is what is called a PEEP. Price index point. PEEPs. So PEEP is the movement of the market on the positive or negative direction. Now, somebody will be wondering how you don't understand what they mean by positive or negative direction. For example, you go to the market, you are the buyer now, then the seller is in the market. When you get to the market, two things will either happen. Either you buy whatever you want to buy and the buyer makes his profit, or you walk away and the buyer makes a negative return back home. Simple. Also, another example, stand in a position wherever you are right now, then take a step further, move front, take one step further. That is one PEEP in a positive direction. Then, if you're taking another step backwards, take one step backward, that is minus one PEEP, which is a negative direction. That's just what they mean. So in forex trading, it's either you are in positive direction or you are in the negative direction. But we calculate our movement. We talk in pips. We talk in pips. We analyze our prices, money in pips. Now, what is a pip? A pip is the smallest price movement that a given exchange rate makes based on market convention. Since most major currency pairs are priced to four decimal places, the smallest change is that of the last decimal point. For most pairs, this is the equivalent of 1 over 100 of 1%, or on basis point Euro USD. Now, the last digit, we have the last digit 6 is called a pipette. The second to the last digit 8 is called a peep. I think this one, just know it. I've explained it the other time, movement. But now just see it in a situation where we have Euro USD, which is the currency PM. We have 1.14086. Now the last digit is called a pipette. Why 8 after the 6 is called a peep. Meaning, when calculating your peep movement, you always start with the digit before the last digit. Simple. So if you want to calculate your pips, always start with the digit before the last. Very simple. Let's, for example, maybe you have another figure 1.1508, 1.05096. You just pick the 9 as your pip. Very simple. There's no need. I've told you on this channel, we are here to make Forex very, very simple and interesting to you. So just know that the last digit before the last one, second to the last digit, is always your pip. Yeah, just before the last digit to a layman. A pip is the number of steps that the market has moved either in your favor or against you. Just the same way I've explained the other time. So it's either the number of movements the market make either against you or in your favor. So that is pip. Now let's look at this example. Let's see what's the P pair. Just the way we said the last second to the last digit. You can see this is GPP USD. This is a currency pair. As I told you earlier, GPP is a currency. USD is a currency. Now, but in Forex, what is being traded is currency pairs. So you must pair two currencies together before you know you are doing a transaction. There must always be a buyer and a seller. So here now we have GPP USD. GPP price is 1.35361 dollar, and the US dollar USD is 1.35371 dollar. So now for you to know the pip, it is simple. Is the way you calculate the pip is just to say 7 minus 6. That's the second to the last digit on your dollar and the second to the last digit on your GPP. When you minus it, you get 1. So it's simply 1 pip. Or you just do it like this, you minus it. You minus 1.3536 blah blah and 1.35 minus 1.35371. When you minus it, you have 0, you have 1.0 thereabout. You have 0, we have 1 0, which is 1 pip. So the unit of measurement to signify the change in value between two currencies is called a pip. This is another definition. The unit of measurement to signify the change in value between two currencies is called a pip. You can see we have 1 pip as it signifies the change in value of these two currency pairs, of this currency pair. If GPP moves from 1.35361 to 1.35371, that is 0.0001 rise in value, is called a pip. It's just subtraction. You subtract this from this, you get 0.001, which is a pip. So please just let that stick into your mind, and by the time we start the practical, you'll be able to understand that very, very well. You see it in a real life situation. Then we have another currency pair, Euro USD. Now, Euro is the base currency. USD is the quote currency. We also have, let's finish with Euro USD now. So now, for us to, as we are calculating them, now the number of pips here now is just this minus this. That's either the quote minus the, if you should do base minus current minus quote, you have it in negative. So, but now we have it, we just minus subtract the 4 minus 3. Second to the last digit on Euro, second to the last digit on USD to give you 1 pip. The same way on USD, JPY, we have the base, which USD is the base and JPY is the quote. So when you minus the last digit, 1 pip, 3 minus 2, it gives you 1 pip. A pip is usually the last decimal place of a quote. Most pairs get to 4 decimals, but there are exceptions like the JP pairs. They go out at 2 decimal place. So JPY pairs like JPY, might see a pair like JPY that goes at 2 decimal place. That's 113.82 USD. Then JPY 113.83. In that situation, you just take the last decimal figure there. You just take it last decimal, then that is which is still the same thing, is the fourth, which is the fourth. So you just subtract. Now, how to calculate pips example. Normally, all this calculation is not something that you really need, but for the sake of this training, for people that are new, I'll just teach you. But when it comes to practical, everything is automated and you can see it and calculate it on your chart. Question: calculate 50 pips TP and 20 pips SL for a buy order on Euro USD if your entry price is this. To calculate your TP for a buy order, you will add the number of pips I don't think you need this now. You don't need this particular calculation now. Just know the last decimal point and the last digit if you have two decimal points. I don't think you need all this calculation now. So I won't get you confused, please. GPP USD base currency. Now, the currency you are buying when you trade the pair Forex pair. That is currency you are buying, which is when it comes to the issue of GPP and USD. We are now talking about base and quote currency. Please listen attentively. Base and quote currency. For example, we have GPP USD. In case you've not subscribed to this channel, please do subscribe. Then feel free to mail us and ask questions. Feel free to comment, like, and ask questions, please. It's very, very important. Base currency, GPP, which is pounds sterling, British pounds, and we have US dollar. So British pound now is the base currency here, the currency you are buying when you trade the forex pair. While the quote is you are selling when you trade the forex pair. So you quote currency you are selling, the base currency you are buying. You buy the pair if you believe the base currency will increase. Very simple as ABC. From your analysis, which you get to that place, don't get confused. When you have from your analysis and you believe, you've confirmed from your analysis that the market is going to buy, which I also told you in our previous classes that buy simply means you can say long, maybe the market will go long, or maybe the market will go upwards. So those are the languages you can be hearing when it comes to buy. Or they can say the market is going bullish. So it's the same thing. When you say bullish, that's buy, that's long, and that is upward movement. So you buy the pair if you believe the base currency will increase. From your analysis, if you believe that the market, that's the base currency, which is GPP from this example here that we have here, that's GPP. If you believe that it will increase in value, then you buy. Then you sell the pair if you believe the base currency will decrease. That's this. You sell it off. You sell it off if you believe it will decrease in value. Also, lot sizes and leverage. There's what we call lot sizes and leverage. Now, somebody will be asking, what is lot size? When it comes to risks and money management, this is very, 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 very vital. This particular lot sizes and leverage is very vital. But I will allow you digest what you have learned today so far, and in our next class, the next video, you will know more about lot sizes and leverage. Lot sizes and leverage. In our next class, you will know about that. In case you want to do a little research about some of the things I'm teaching you, you can go to babypips.com, babypips.com. Then you click beginners class, then you can see all the necessary things that I've been talking about. So in case you've not subscribed to this channel, please hit the notification button first for our update, because this is a school now. This is school and you need notification for our next lecture. So click notification button, subscribe and share, like and comment. Your comment is important to us for us to improve our services to you. And remember, we will not ask you for a dime. We are not asking you for money. Just keep learning. And if you have any question, look at the description box. You find our email there. You can mail us and we start from there. Thank you very much, and we'll see you at the top. God bless you.